Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark will guide us through the bumpy markets of the past week and check out precious metals. Sprott USA Holdings President Rick Reaugh tells us that the glow should be back on uranium shortly and looks at cobalt, which he says acts differently than anything else on the equity markets. He also tells us which equity market is best for predicting future action. Ed Steer, founder of EdSteerGoldAndSilver.com, believes not just gold and silver prices are being heavily manipulated, and because of that, copper prices have lost their ability to gauge how well the economy is doing. Plus, right after the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cypress Development CEO Bill Willoughby. We'll talk to Ross Clark right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's the CEO of Chartworks. Welcome back to This Week in Money, Ross.
Good to be with you, Jim.
Kind of a little bumpy start to the markets, but again, did we end up with record highs?
Oh, we did. You know, it was, a week and a half ago we got that mild shakeout. I say mild if you were looking at just closing levels, but if you were looking at the intraday swings, we were getting days with the Dow with 300 and 400 point swings within it, just starting to have a lot of volatility. But, you know, that's, take a look at the fact that we have put in these new highs in the beginning of the favorable seasonal window, which basically starts at the beginning of November and takes you out to May. And we did have good positive bias during the unfavorable period from May through October. And so the years, and we put out a report on this just the other day, you take a look at the years where you had that positive bias during the poor months, and when you manage to put in new highs quickly in November like we have, that's a really good omen moving forward. You can generally look to buy the first and second good short-term pullbacks, and we use a short-term oscillator. It gave a oversold signal a week and a half ago on the broad indices, and well, actually no, it's 2 weeks ago now. And then just in the last few days, at the beginning of this week, the NASDAQ, the Qs, triple Qs, the NASDAQ 100, it produced a good oversold reading, and it looks as though it's now primed to move. So historically, when you're strong right now, you will typically be strong through the first part of the year. It'll take you into at least the first 2 to 6 weeks of the following year. At that point, you can invariably, you got maybe a 50% chance of a correction. The other 50% of the times it starts to accelerate right through May. And as we get into the latter part of this year, first part of January, we'll have some guidelines to look at and see how things are just evolving as we get to that point. And right now, one of the things that's jumping out at me, you know, we typically look for sentiment to see, you know, are you got excesses, or we take a look at the credit markets to see are there any problems. And in both of those areas, I don't see anything. However, when I look at the options market, and an option is gives an individual with a call option, it gives them the right to buy something at a specific time, at a specific price, and just for a given period of time. A put option gives somebody the right to sell. So if people are anxious about the market and they feel they need protection, they will go out and buy put options. If they're really positive about it, they'll go buy call options. They're looking for some leverage on the upside. Well, in the last week or so, the put-call ratio, so that's the number of puts versus the number of calls, has dropped to the lowest level that we've seen since middle of 2014. And invariably, and that ratio is down at 0.8. On a scale that's usually like 0.7 would be exceptionally low, 1.3 would be exceptionally high. So we are right in that bottom portion of the ratio for the oscillator. And invariably what you will find is that within the next 2 to 3 weeks, the market will form an interim high, and you'll get a correction usually of 5% or more. So I've got that sitting out there as a potential concern as we get into the early part of January, because this has got a pretty darn good track record.
Precious metals, are they reacting to this at all?
Well, they're reacting to the fact that markets are strong. Nobody seems to, really be looking for anything in the way of a hard break. So you've had the bullion has been done reasonably well in the last couple of month and a half. Tried to bounce up, couldn't do it because the miners were looking terrible. We talked about how the miners couldn't get back to that September low they had broken down from, whereas the bullion was holding above it. And in this last week, as equities have come to life, and as the alternatives over in the blockchain and the Bitcoin side of things have come to life, which, some people look as an alternative currency or as an alternative to government-controlled currencies, with the action that we've seen over there, that's just taken all the wind out of this precious metals market. Now, for me, I've been hoping that we would see the silver and gold come under pressure as we moved into December. Wanted to see the ratio of gold to silver move significantly in favor of gold, because at the really significant bottoms, when you look back over the decades, when silver has become sort of a capitulation relative to gold, that puts you into an important low. And as we finished off November, I was close to getting a buy signal. If we stay as weak as we are so far this month, I could have an outright buy signal at the end of December, and in terms of the degree that we'd be oversold. And all we're going to need is a bit of a price flip to the upside, a positive flip, to gain a positive bias and, potentially a move that could run for a number of months.
Well, that's why you gave us the 50-50 number, right, for a correction.
Well, that's right. And the idea being, that we can try and second guess where things are going to be. But as we get closer and closer, we'll watch this rally as it's unfolding right now. It wouldn't be unusual to see a small correction still between here and the end of the month. But into January, that's where we start to have, we want to be more cautious in terms of having very tight stops for anybody who's on the long side into there. And, we're putting out reports for people so that they have the opportunity to be on top of this.
Ross, thanks a lot for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark, CEO of Chartworks. You can contact him at ross.clark@chartworks.ca. Coming up, Rick Reaugh next on This Week in Money.
Always consult your investment professional before making any investment decision.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYP.V, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Reaugh, President and CEO of Sprott USA Holdings. He's speaking to us from Carlsbad, California. Rick, welcome back to This Week in Money.
Always a pleasure. Thank you for having me on.
A brand new poll says 61% of Canadians feel Christmas spending is out of control. Is that pretty common everywhere?
I don't know the answer to that. I suspect that generally consumer spending relative to savings is out of control. We tend, I think, as a society, both the United States and Canada, to believe that liquidity, that is, the fact that we have some cash, overwhelms solvency, the fact that many of us are living beyond our means. So I suspect that the poll that you cite is probably well-founded.
Is there a way for somebody to stick to their budget? Because everybody I know, they have a budget, they promise every year to stick to it, and yet somehow they creep over it.
I guess I'm a freak. Perhaps it was because I was brought up by a single mother for whom the end of the month was always a challenge. She was a school teacher. And so I learned to be concerned about the budget from a very early age. I read a book by Nickerson when I was 14 that talked about paying yourself first, and it suggested that you take 10% pre-tax out of every paycheck and save or invest it. And I followed that slavishly to the extent that when I immigrated to Canada in 1970 and went to the University of British Columbia, while I was waiting for the bus, I stuck my thumb out so I could save a quarter. I may be a freak, but I have been an anomalous saver, and the truth is that now that my earnings are substantially more than what I need to sustain myself, my wife and I save about 45% of pre-tax income.
Rick, is the U.S. dollar key to commodity prices?
I believe it is. First of all, commodity prices are denominated in U.S. dollars, but particularly with regards to the gold price, I think that gold trades, among other things, in a contrary fashion to people's faith in the maintenance of the spending power of the U.S. dollar, particularly the U.S. dollar expressed by the U.S. 10-year Treasury, which I think is arguably the most important savings mechanism in the world. To the extent, as an example, that the delta between the straight U.S. 10-year Treasury and the TIP, the inflation-protected Treasury, widens, which means that people are nervous about maintaining the purchasing power in the U.S. dollar, the gold price inevitably does very well.
Is the uranium market turning bullish?
I think that depends on your time frame. Certainly the fact that we have reduced near-term production in uranium is important. What's more important is the reason. The two big producers, Kazatomprom and Cameco, didn't reduce uranium production in a move to increase the uranium price. They did it because of a realization that they were losing money on every pound that they produced, and that selling the pounds 3 years from now or 4 years from now at $60 a pound was preferable to selling those pounds now at $25 per pound. We talked on your show before about the fact that there's two ways out of a resource bear market. One is demand creation, where the low price of the commodity stimulates demand because of increased utility to fabricators. The other is messier. That's supply destruction, where the ongoing low price of the commodity makes commodity production uneconomic and shuts in productive capacity. When you shut in productive capacity, when you balance supply and demand by reducing supply, the effects are longer lasting because it's very hard to restart production. It often takes 4 or 5 years to restart production. So what we've seen in the uranium industry, which is a substantial reduction of supply for economic, not market reasons, is very bullish. That being said, the direction in uranium prices in the next 18 months is likely still to be set by the pace of Japanese restarts. The reason for that is that a lot of the above-ground inventory, that is the surplus supply, is in the hands of Japanese electric generators who aren't using that uranium because their plants are idle. If you restart those plants, much of what is believed to be above-ground supply, which depresses uranium prices, all of a sudden becomes inventory and process, and the uranium price can go up dramatically in that circumstance.
Do India and China have plans to open up perhaps hundreds of atomic plants?
I think hundreds is an exaggeration, but I think what's important to know in uranium is that when you look at the plants that are shutting down, they're small, old plants that might consume 250,000 pounds a year. The new plants that are being opened, particularly in China, are large plants that consume 1 million pounds a year. So when people balance plant closure against plant openings, what they aren't taking into account is that the plant openings consume 4 times as much uranium per plant as the plants that are being shut down. Certainly, if you get through the valley that we're experiencing right now in uranium, the uranium price outlook is very, very good as a consequence of new plant construction, and also as a consequence of the fact, and we forget this in the West, Jim, that there are 2 billion people in frontier and emerging markets countries that aspire to the same standard of living that you and I have, and that requires greatly increasing their electricity consumption.
Is cobalt in short supply, and is it going to get worse?
Is cobalt in short supply? It is. Cobalt is a unique metal. The first that I have seen, I'm not trying to say it's the only one, but it's the first that I have seen where the fabricators say if you increase supply, you can increase price. I've never seen that before. Fabricators using cobalt have said that the utility of cobalt in various applications, including batteries, is so extraordinary that they would use more of it in fabrication, even at a higher price level, if they could be assured of supply. It's also important to note that economic cobalt is produced really only in 2 places, Congo and Russia. Yes, certainly there are cobalt deposits in places that are more comfortable, like Canada and the United States. But those cobalt deposits are so small and scrappy that they aren't actually supply, except in the minds of speculators who want to be in the cobalt story without being in a country that is uncomfortable for them. Are there other sources of cobalt that will arise around the world that are simultaneously large and more comforting? Yes, probably in Brazil and probably in Australia. But cobalt is an absolutely unique material. Unique, as I say, because it's the only material I know that would experience an increase in demand and could experience an increase in price perversely if you increased supply. Speculators, again, who actually care about the reality of cobalt, will have to make themselves comfortable with countries that they are profoundly uncomfortable about.
Why is cobalt so popular, and what's it used for?
It is popular because it has absolutely unique fabrication properties, particularly in batteries, but really in a broad range of electrical technologies and even in some other metallurgical technologies. The range of utilities of cobalt have not really been explored because the supply of cobalt is so constrained, and because cobalt is rightly viewed by fabricators as a byproduct of copper production, meaning that there's very little primary cobalt production, and the supply of cobalt is driven by nickel prices and by copper prices, because cobalt is produced primarily as a byproduct of those two commodities. If the cobalt market continues to grow, and if we as an industry discover primary cobalt supplies or other nickel-copper deposits that have economic concentrations of cobalt, perversely, as the supply of cobalt increases and the security of supply increases, demand will increase and the price can increase. I have never seen a commodity in my life before where increasing supply can lead to increasing prices.
Are we running out of copper?
We are not running out of copper, but we are at a deficit in copper, meaning that we are consuming more copper than we're producing as a consequence of several years of very low copper prices. The truth is that the world is relying for copper on deposits that were discovered 30 and 40 years ago and put in production 20 years ago. Great big copper mines in the world, mines like Chuquicamata, like Grasberg, like Escondida, like Bingham Canyon, have been producing for many decades. They are long of tooth, and they are well past peak production. There are other sources of copper in the world, importantly, of course, the Kamoa-Kakula discoveries by Ivanhoe in Congo, that mean that we will have ample supplies of copper for the next 50 or 60 years. But that copper will take at least $3.50 a pound. Not Kamoa and Kakula, but other new supplies will take at least $3.50 a pound to incent them. And we are going to need to develop new sources of supply to replace the supply that is naturally declining as a consequence of the decline in productivity of the mines that have carried the world for the last 30 years.
Is lead a metal that's been ignored?
Lead has been ignored. Lead was in oversupply, and everybody forgets that battery technology as it exists in the world today is very, very lead-centric. When people look at the composite batteries that will become increasingly efficient in the future, what you forget is that almost irrespective of what happens in battery technology, batteries, as an example, that power internal combustion engines, which are a much larger market currently than the electronic vehicle market, are lead-centric. Lead has all kinds of other utilities. That isn't to say that there aren't problems with lead. Lead process technology, the toxicity of lead, but the truth is that lead is an absolutely critical element in the way that the Western world lifestyles are, caused to occur. And lead is an absolutely critical element in the distributed storage of electricity that will be needed to bring 2 billion people worldwide into the standard of living that they aspire to attain.
Is Africa the new resource frontier?
It is a new resource frontier, certainly. I think that when you talk about new resource frontiers, that you probably need to consider Central Asia, too. That wonderful metal belt that we call the Tethyan, which extends probably, in my definition, from Turkey all the way through Mongolia. Of course, geologists would include places like the Ukraine and Romania in that definition. But I absolutely think that Africa, that Central Asia, and that parts of South America, that's a different way of saying that frontier and emerging markets terrains, places that are politically and socially uncomfortable for Westerners, are the new frontiers in extractive industries.
We'll have more with Rick Reaugh next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com. Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMY.Resources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Reaugh, President and CEO of Sprott USA Holdings. Rick, do you think the Dow is likely to continue to hit new highs in the new year?
That's a question that's probably above my pay grade. I'm a resource specialist. I am certainly not one who says that a collapse of the U.S. economy and hence U.S. equity markets is imminent. I note that the Dow and I actually prefer the S&P 500 as a metric. I agree that the valuations by historic metrics are stretched, but I would draw your listeners to the fact that the companies that comprise the S&P 500 are an unusually strong group of companies. They have maintained their export earnings in the face of a strong U.S. dollar, meaning that they have expanded not by a weakening currency, but rather by their own efforts. Their balance sheets, from a historic perspective, are in uniquely good shape. The leadership of the S&P 500, unlike the political leadership in the United States, was scared by 2008 and got their balance sheets and their income statement in very, very, very good condition. And finally, artificially low interest rates have at once lowered these companies' costs of capital by reducing their borrowing costs, but also made their distributions, their dividends, more valuable relative to other savings products. So while I believe the valuations are stretched, and while I can't buy many companies in the S&P 500 because of my unfamiliarity with their businesses, my problem, not theirs, I would argue that the reason for valuations is not necessarily collective stupidity so much as artificially low interest rates.
Does the U.S. tend to have major market shocks every 10 years? In 98, it was long-term capital. In 2008, it was the Lehman Brothers. If it's next year, who might it be?
I can't speak to periodicity because I'm not a student of periodicity. I will say that the complacency that American and by extension global investors express towards the federal government balance sheet is troubling to me. I believe that investors' expectations of the future are set by their experience in the immediate rather than the long-term past. And I believe that investors in the United States and around the world are confusing liquidity, that is the fact that there's cash in the system, with solvency, which goes to collective debt, and the fact that in the United States and Canada we're living substantially beyond our means. I also am troubled by the increasing xenophobia that we see both in the United States and Canada. The nativist and protectionist regime in the United States where Trump wants to protect inefficient U.S. workers by building a wall, or the tendency by the mayor of Vancouver, who I call the Trump of Canada, to protect, if that's the right phrase, Vancouver tenants from market forces in Vancouver real estate from foreigners. I see a real tendency by voters to conflate their own lack of competitiveness with the need to be protected by more competitive people from outside. I see an absolute correlation between the nativist populist tendencies expressed by Trump and the native populist tendencies promoted by Trudeau and Robertson. And I think the fact that more voters don't understand, first of all, the extraordinarily harmful nature of governments in this fashion, and also the immorality expressed by populist nativist sentiments. I suspect that might be one of the great black swans of this era that people don't understand.
Free trade the way to go around the globe?
More than free trade on an international basis. The idea that we need to convince rather than compel people to our own will. The sense that politics rather than markets are the right way to conduct interchange between people, not merely at the international level, but also at the local level. The truth is that I think that we have an absolute right to try and convince other people of the efficacy of our own values, but we do not have the right to compel. And the fact that on both sides of the 49th parallel, and in fact around the world, we believe that we have the right to compel rather than convince other people of our own values, could ultimately lead to the kind of politics that plunged Europe into World War II. I'm not suggesting, by the way, that we're going to have World War III as a consequence of this. The only thing that I'm suggesting is that the increased politicization of public interchange is always evil, pernicious, and inefficient.
The junior stock markets are heating up. Do junior stocks run higher towards the end of a major bull market, and do they signal that a bear market's around the corner?
I don't really know the answer to that. I trace the juniors myself as having bottomed towards the end of 2015. The gold juniors is having a spectacular 2016, and 2017 is digesting the gains that occurred. I feel myself relatively sanguine about resource markets. I'm not sanguine about the fact that we're seeing a rash of new financings among butchers, bakers, and candlestick makers. But I certainly feel good about the resource complex, including the gold business. And I feel good about, say, on a qualitative basis, the best 20% of juniors. It's important to note, and you and I have discussed this on your show before, that at any point in time, probably 80% of the juniors that pollute the Canadian, Australian, and British markets are valueless. So the market is always, from an empirical point of view, overvalued because 80% of the listings in the market have no value whatsoever. But my suspicion is that 2018 will be a very good year for people who select stocks well.
What do you see ahead for gold and silver?
I see that we are in probably the very early stages of a very good market for gold. I'm not expecting the gold price to lurch up, which is, of course, what most people want to see happening. I see gold performing its role as a store of value really very, very well. The fact that gold has done well during a period of relative U.S. dollar strength and a period of real strength in U.S. government securities is, to me, a very, very bullish sign. I believe, as I said at the beginning of this discussion, that the U.S. 10-year Treasury is towards the end of a 35-year bull market. And if you believe that gold trades conversely to faith in the U.S. 10-year Treasury, that would suggest that gold is closer to the beginning than the end of its bull market. So I feel good about gold. That isn't to say that I expect, as an example, gold to have a 2 handle in front of it anytime soon. I'm old enough and smart enough not to make any near-term price predictions, because that's above my pay grade. But I can tell you this, as an owner of physical gold, which I am, I feel much more comfortable owning it than not.
Your thoughts on Bitcoin and cryptocurrencies in general?
My first comment is that I'm certainly not an expert on them. As you probably know, Sprott is fairly deeply involved in conjunction with Tradewinds, the exchange operator, electronic exchange operator in New York, in creating our own gold-backed token, which will trade via the distributed ledger, but will be, in fact, backed by, and in certain circumstances, exchangeable for physical gold. I love several aspects of the distributed ledger and blockchain. I like the fact that it's almost frictionless. It really, really, really lowers the costs associated with mediums of exchange and also securities and investment settlement and clearing. I love the anonymity associated with the blockchain. And I love the fact that private currencies are being created to compete with the U.S. dollar and the Canadian dollar. I'm a consumer of currencies, Jim. I spend U.S. dollars, I spend Canadian dollars, I spend euros. And the fact that more currencies are being created to satisfy me, currencies that suit my needs better than other fiat currencies, I think are extremely attractive to me. At the same time, I value gold and silver because they aren't merely mediums of exchange, but they are rather stores of value. I'm not one of those who says that Bitcoin has no value. I think the utility is in the algorithm and the efficiency, and also the anonymity. My suspicion, however, is that Bitcoin becomes less efficient as a mechanism of exchange as the price goes higher, simply because people are afraid to spend it for fear that having spent it, if the price of Bitcoin goes up relative to what they spent it on, it will become an inefficient mechanism. And also because of the incredible amount of electricity that is beginning to be consumed documenting the blockchain. The very success of Bitcoin is making it more a speculative vehicle than a mechanism for exchange, and that's concerning to me. Now, I need to caveat all of that by saying that my real expertise is the conjunction of extractive technologies and mining and oil and gas with markets, meaning that I may be the least qualified person that you could possibly interview with regards to Bitcoin.
Are the banks kind of sweating because they don't get a piece of the pie when you exchange Bitcoin, whereas when you use your debit card or credit card, they do?
They should be. The truth is that all financial intermediaries should be concerned about the discussion around a more efficient mechanism of delivering financial services, which is offered up by the distributed ledger. I mean, you know, truly, the Toronto Stock Exchange and the New York Stock Exchange and NASDAQ could become things of the past, as could the Depository Clearing Corporation and, mercifully, the Securities and Exchange Commission and the Ontario Securities Commission. The truth is that the technology, as it will come to exist, obviates the need both for many forms of financial intermediation and also for financial regulation. And anonymity could actually mean, as people became more self-reliant, that both issuers and investors could opt out of the regulated exchanges and operate in real free markets. So certainly the existing financial establishments need to be concerned about that. The citizenry, meanwhile, should rejoice about the possibility to end their subjugation to regulation.
President Trump has a plan to cut taxes in Canada. We have the tax and spend liberals. Do you see any positives for Canada in 2018?
A pox on both their houses. Mr. Trump's plan is populist nativism. Both Trump and Trudeau were well explained by the great American journalist H.L. Mencken, who said an election is best understood as an advanced auction of stolen property. Mr. Trudeau steals on behalf of the sort of intellectual elite in Canada. Mr. Trump steals on behalf of a different constituency. You'll notice that Mr. Trump's tax cuts don't include any spending cuts. In fact, Mr. Trump's base would like to forward shift responsibility for the fact that they live beyond their means on a constituency that can't compete with them, the unborn, by adding to the debt. And Mr. Trudeau is the same.
Do you think we're likely to see more wars in the new year?
I don't know. There, again, you are beyond my competence, except that, of course, the increasing reliance of the world to rely on politics and politicians rather than markets and voluntary exchange is troubling. I'll leave it there. I'm not one of those who believes that we're, as an example, immediately going to face a confrontation with North Korea. I believe also that some of the threats in the Middle East are receding. There are other parts of the world, South Africa, that I am afraid are spiraling towards violence. But the truth is, I believe that as people become more educated, to the extent that they become more open and more tolerant, that the world can and should become more peaceful.
If the Middle East unwinds, are you bullish on oil?
I am bullish on oil really irrespective of what happens in the Middle East. The truth is, and we discussed this on your show before, the International Energy Agency has suggested that the global cost to produce a barrel of oil, including prior year's write-downs, sustaining capital investments, and the cost of capital, is about $60 a barrel. When the price of oil got to $45 a barrel, that meant that the industry was losing $15 a barrel times 100 million barrels a day. In other words, the industry was losing $1.5 billion a day and trying to make it up on volume. It's interesting that the increase in oil above $60 is blamed on a Saudi prince putting his uncles in jail, while Saudi production has been maintained. The increase in the price of oil was rather due to the low price of oil before, constraining sustaining capital investments by the oil industry. It has been estimated that on a global basis, since 2012, that the industry has not made in excess of $2 trillion of sustaining capital investments, which has reduced the capacity to produce in places like Mexico with Campeche, Venezuela with Maracaibo, Peru, Indonesia, Nigeria, Russia, and it has been this deferral of sustaining capital investment and the lack of the maintenance of production in some of the big producing areas of the world that have led to the increase in the increase in oil price. Most of the increase in supply on a global basis has taken place in the United States. And there's three reasons for that. One is the unique law in the United States that incents landowners to participate in oil and gas exploration, unlike other parts of the world. The second is the convergence of technologies that we've seen, measurement well drilling, horizontal drilling, multi-stage fracturing, and of course three-dimensional seismic. But the third, and this is underreported, is the extraordinary low cost of capital, both debt and equity capital, enjoyed by U.S. producers. It's estimated by several observers that U.S. basin-centric oil and gas producers are trading in equity markets at about 1.5 times net present value, which is to say that their equity cost of capital is sub-zero at the same time that they are active consumers of debt, debt with the interest rate manipulated to artificially low levels by the U.S. Fed. So I think the increase in production that we're seeing in the United States rests on a very dangerous foundation. At the same time that production levels in much of the world have been constrained by low energy prices and a deferral of sustaining capital investments.
At some point, could the political divide in the U.S. affect the financial markets?
I suspect that the political divide in the U.S. will impact financial markets. I suspect that politics in the United States is becoming increasingly viewed for what it is, which is a clientelist oligopoly, where the job of the politicians is to steal on behalf of their constituents at the same time that they defend their constituents from being stolen from. The circumstance that caused America really truly to be great were free minds and free markets. That isn't to say that the United States ever enjoyed free markets, but there was an expectation in the United States that if you succeeded by your own accord, you were entitled to the fruits of your own effort, or really an understanding in the United States that wealth, individual wealth, was a consequence of delivering utility to others. There's a different expectation in the United States now, which is that wealth can be stolen from other people in the country by participating in politics, and I think that's very, very dangerous.
Are stockbrokers subject to more regulation in the U.S. or Canada?
I need to duck that question a bit by virtue of the fact that I'm not a stockbroker in Canada and I'm not licensed in Canada. I can tell you that regulation in the United States is overwhelming and pernicious, and that in fact in the United States stockbrokers are often precluded by law from servicing their customer efficiently. Whether that's the case in Canada or not, I can't say.
Do you focus specifically on the resource industry?
I do. I work for Sprott. Sprott Inc. is Canadian domiciled and listed, and its primary business is resource investment management and resource investment around the world. I myself focus on resource investments, although I also have investments in infrastructure, real estate, and financial services. But in terms of the services that I offer other people, it's exclusively resource-focused.
Do the resource sectors go through cycles?
There's a rhetorical question. The resource businesses, as I know them, being capital-intensive, are the most cyclical businesses on the planet. In addition to being extremely cyclical, they're extremely volatile, which is different. Junior resource stocks can increase in price or decrease in price by 20% for no reason whatsoever, simply because they're so volatile and trading in them is so emotional.
Do you see any resource sectors that are currently in a bottoming phase?
I think the entire industrial materials business, other than the battery metals, are in a bottoming phase. I think that the energy complex, although North American natural gas may go a little lower for a little longer, are in a bottoming phase. I think agricultural minerals, potash, phosphate, ammonia from natural gas, are definitely in a bottoming phase. I feel extremely good about the natural resource business over the next 5 years. That doesn't mean that you can buy indiscriminately. It doesn't mean that you should buy a 10-cent junior that has no money in the treasury and is run by a butcher, a baker, and a candlestick maker. Maybe a Cobalt stock run by people who couldn't spell Cobalt 5 years ago. It doesn't mean that this is the time to be stupid. It means that intelligent investing strategies will be rewarded quite well over the next 5 years, partially as a function of the fact that they performed so poorly over the last 5 years.
Looking back at 2017, your thoughts on the markets in the world?
I can't comment on the world too much. In the markets that I follow, I think the gold equity markets digested an insanely good 2016. Those markets sort of had to digest their gains. And the rest of the markets in the resource business unfolded quite rationally. I see 2018, 2019 as being pretty good years. Right now I would describe it as not too hot, not too cold, just right. I spent about 5 weeks on the road, getting back home about 10 days ago. And I was very heartened by what I saw. I saw investors willing to invest, in fact, eager to invest in the sector, but asking good questions. They weren't saying, Rick, when do you think the gold price will go up? They were saying, Rick, what gold mining companies can be counted on to allocate capital efficiently over the next 5 years? This combination of a willingness to invest with the sense that they need to invest more intelligently, I think is extremely healthy.
Are First Nation artifacts a good investment?
I don't know. I personally collect First Nations art because it appeals to me. I like to have it around me. I enjoy buying art created by contemporary British Columbia Aboriginal artists because I enjoy buying art from people who I can talk to. I enjoy the narrative surrounding the art I buy. And I enjoy looking at the art after I've bought it and using it to draw up a recollection of the discussion that I had with the artist. So for me, there's extraordinary utility in it. Whether or not it increases in price is a very different circumstance, and frankly not one I'm particularly involved in. I can tell you this. I work at a place called Sprott, which was founded by a guy named Eric Sprott, who is one of the most important private collectors of Canadian Aboriginal art that exists. And without trying to make any money at all collecting Aboriginal art for 40 years, he's made an astonishing amount of money. And he doesn't care about the money at all. He likes the pieces, and that's right where I am.
How's the 2018 Sprott Symposium in Vancouver shaping up?
Last year was the best year that we have had so far, and this year is going to be substantially better than last year. It's worth noting that attendance at that conference every year has increased, even through the bad years of the resource cycle. And if you pay attention to the attendee evaluation forms, which we do every year, the content has gotten better every year. We set the bar very high with our speakers next year, and we will handily exceed that bar this year. The gurus will be there for sure, but we have also done a wonderful job of having speakers at that conference who have built very large natural resource businesses of their own volition over the last 20 years. That is what I call the 7-footers, the Pierre Lassans, the Bob Quartermains, the Ross Beatties. And we have also, I think, done a very good job of including people who are in their 30s and 40s who we believe will be the 7-footers of the next 10 years. And we will continue that this year. Last year we had record attendance with over 800 paid attendees. This year I'm highly confident that we will sell out, meaning that we will be over 1,000 attendees this year. We sell out every year in terms of exhibitors, and it's worth your listeners' while to know that unlike most other investment conferences, there are qualifications to be an exhibitor at the Sprott conference. It isn't merely the fact that you have a pulse and a check that cashes. At the Sprott conference, to be an exhibitor as a public company, you have to be owned in a Sprott performance fee generating account. That doesn't guarantee that the share price of every exhibitor at a Sprott conference will go up. It means they have been vetted, and we like them well enough that we've invested our own money in them. That value proposition is what has caused the Sprott Vancouver Investment Symposium to be a success.
How can people find out more about Sprott?
Certainly going to our website, www.sprottglobal.com, is the best way to do it. The other way that one might do it to learn more about our services is to call us toll-free at 800-477-7853. That number works both in the U.S. and Canada.
Rick, thank you so much for chatting with us.
Always a pleasure. Thank you.
My guest has been Rick Reaugh, President and CEO of Sprott USA Holdings. He was speaking to us from Carlsbad, California. Coming up, Ed Steer, next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ed Steer. He's the founder of EdSteerGoldandSilver.com and a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Edmonton. Ed, welcome back to This Week in Money.
Thanks for having me on.
Ed, gold and silver continue to be stuck in a trading range. Is it being stuck in a trading range for a period of time, part of the normal gold and silver cycle?
Well, it's been stuck in a trading range for a couple of months, but starting about a week ago, the powers that be, the boys, J.P. Morgan et al., whatever you want to call them, have been leaning heavily on the price starting late last week and again this week, so it's no longer in a trading range. It's heading down with some conviction. Silver should be pretty close to being washed out in the downside, and gold's still got a ways to go, so how long is this going to last, I don't know, but hopefully it'll be over soon because we're all getting tired of this.
How are the commitment of traders' numbers looking for gold and silver?
Well, I'll tell you what, we're doing this recording at 1 o'clock noon on Thursday, so in 24 hours I'll have a look at the latest COT report for positions held at the close of trading on Tuesday. And I know that Ted is expecting huge improvements. Ted Butler, that is expecting huge improvements in both gold and silver. And of course, since the cutoff, which was Tuesday, we've got Wednesday and Thursday, and we're going to see even more and bigger improvements in next week's report. So it's certainly heading in the right direction. And as I just said before, the sooner it gets to the bottom of this thing and it gets over with, the happier everybody in the precious metal world is going to be. But it's a pain while we have to put up with these guys.
Are the commitment of traders' numbers likely to signal a bull move in gold and silver?
Well, they always do when we get to the bottom of the cycle, when the managed money traders have been forced to sell their very last long and put on their very last short position. The bottom will be in.
and then we'll be set up for a rally, and how big that rally is going to be depends on whether or not J.P. Morgan and the rest of the big 8 traders decide to step in front of it on the way up this time or not. But it's certainly the Commitment of Traders report is getting more bullish by the minute, especially after today's activity.
Some junior resource stocks seem to be gaining steam. Is this a sign that junior gold and silver stocks are due to move?
Well, it's, if you take a look at today's trading action, which is Thursday, we had a big down move in gold, but the shares are only down a little bit, so somebody's obviously doing some bottom fishing here. I wish I could say the same for the silver shares, but I can't. Some of the mining stocks are doing okay, but that's basically particular news-based information with whatever stock happens to be the hot one of the day right now. I think it's Nova Resources. That's the big ticket item, but we're not going to see any sign that that there's a bottom in and this thing's going to take off. I don't think we'll see it from the stocks first. I think we're going to see it in the gold price because everybody in the precious metals industry is so discouraged, and the rest of them are off chasing Bitcoin. So when the gold price goes, then the precious metals shares are going to go as well, and of course they're going to go like a rocket sled on rails if this is the real deal.
Do junior gold and silver stocks move in advance of the metal when the bull market kicks in?
Well, sometimes they do and sometimes they don't, and I'll tell you what, this is a thing where you're either, if you're going to buy into this market, you don't try to time this thing until the end. You sort of work your way in gradually. You say, okay, you have to make a commitment, and if you're 3 or 4 days early or a week or a month early, it doesn't really matter. But I'd rather be a month early rather than a month late, let's put it that way.
If war breaks out in the Middle East, are gold and silver bullion and gold and silver stocks likely to be affected?
Well, you would think so. That would be the normal scenario that we would see. Bad economic, financial, monetary, military news is always supposed to be bullish for the precious metals, but it's only bullish for the precious metals if the powers that be in the bullion banks in New York allow it to be. It's as simple as that. So if there's war, will the price of gold rise? Ask Jamie Dimon over at J.P. Morgan, and then we'll know.
We've heard Bitcoin and cryptocurrencies are being touted as the new gold and silver for millennials. Your thoughts?
Well, it certainly is popular with certainly a small segment of the population. I know it's really big in China and Korea and Japan, and certain other people are onto it, and it's really gone through the roof. I remember last night at 2:00 when I filed my column, it just about to break through 15,000, and now I checked it just before we went on air here. It's now around 16,500. So, is it the new gold? I don't know, but to me it looks like the tulip bulb mania of the 1700s, and it's a wonderful idea to get away from the financial institutions and the central banks of the world by having an independent currency that they can't touch. But how it's going to end up is too soon to tell, because the cryptocurrency story is really pretty new, and we'll see how it shakes out in the next couple of years.
Are platinum and palladium stuck in a trading range like gold and silver?
Well, palladium has always been, palladium has not been in a trading range. It's been powering higher here for quite a long time, and it's marching to its own drummer right now, and platinum has been been forced down in price, and it's set a new low again today. And platinum, like gold and silver, is another metal that's set by J.P. Morgan and the other bullion banks in the COMEX futures market in New York. So whatever way silver and gold are going, that's the way the boys run platinum as well. So, in the precious metals, it's virtually a rigged game across the board, although, like I said, palladium, is holding its own row right now.
Does copper predict recessions?
Well, normally they call it Dr. Copper, and there's a good reason for it. However, that reason has now gone totally out the window. Because like gold, silver, platinum, and palladium, copper, crude oil, and several other commodities are now totally controlled by the tangle between the managed money traders on one side and the bullion banks and other traders on the other side. Ted Butler's been writing about this now for 4, 5, 6, 7 years. That the managed money traders and the tangle between the managed money traders and the bullion banks and the other traders have overpowered supply and demand fundamentals. And although Dr. Copper should be predicting whether we're going into a recession or whether we're going into an economic boom, that's another thermometer that's been turned off by the boys.
When you buy gold or silver, are you betting that the manipulators will move the price up?
Well, that's a very good question, isn't it? That's certainly what everybody's doing. Anybody who's buying precious metals now pretty much knows that the markets are rigged against them. And one of these days, this downside manipulation will end. And when it does end, it will end quickly, suddenly. And anybody who's been smart enough or courageous enough to buy when the markets when blood is, as they say, is running in the streets like right now, those are the ones who are going to be benefiting the most.
Do you have any hope that at some point governments will step in and end the manipulation in the gold and silver market?
Absolutely not. The government, especially the U.S. government and maybe the Treasury Department, the Exchange Stabilization Fund, the bullion banks, the Federal Reserve, as far as I'm concerned, they're all happier than clams that the bullion banks in New York are keeping the prices low. So there's absolutely not a snowball's chance in hell.
Are people who normally would be investing in gold and silver dumping their money into cyber currencies?
Oh, certainly. There's a certain percentage of that. I wouldn't say all of it, and that would be a mistake to assume that a lot of people have done that. Most people who are involved in the precious metals market are people who are, of my age, say 50 years of age or older, and weren't on this cryptocurrency bandwagon, aren't likely to get on it now. So yes, there certainly has been some loss, but it would be mostly to the younger generation. And I would say that most people are just sitting there holding their stocks and waiting for this thing to turn. That's what I'm doing.
Do you think it's ironic that the more people mine Bitcoin, the more power is used and the greater the chance that all the computers are going to crash and wipe out their Bitcoins?
Well, I'll tell you what, there's all kinds of things going on inside the Bitcoin world where, Bitcoins are disappearing. I think I read a story just this morning where another one, $50 million worth of Bitcoin was hacked or something like that. And to tell you the truth, you are not talking to the right person about Bitcoin. I am not the person to talk to about this. There are plenty of other people out there far more qualified than me. But as for the chance of anybody being hacked personally, I think the chances are pretty small, but there's all kinds of fear-mongering out there.
Your thoughts on the U.S. dollar. What do you think it's going to do?
Well, I know it wants to crash and burn in the worst way, and like everything else out there are no free markets anymore, only interventions. And there's many, many times over the last 3 or 4 years that, if what I call the gentle hands hadn't stepped in at the very nick of time, then the dollar index would have crashed and burned some frightful amount. So the dollar index or the U.S. dollar, if things continue on the way they are, there's no question about it, it's going to be worth significantly less than it is today. But just a matter of when and over what period of time it's going to happen.
What do you think is going to happen with the loonie?
That's a good question. I think that it all depends on what the price of oil is and the net price of natural resources. The United States has relegated Canada and a bunch of other countries, including Australia and South Africa and South and Central America, and Russia to basically hewers and wood and dars of water for the West. And our currency will do as well as the natural resources that we dig out of the ground will do.
What's new with GATA?
It's the same old. I mean, Chris and Bill and myself. I know Chris just came back from speaking at 2 conferences in London, and he's off to Singapore and Hong Kong in April for more conferences. Bill is speaking at conferences, and I'm going to be at the Natural Resource Conference in Vancouver in January, and I'm speaking at that. So we're just out there putting out the good word about the fact that the markets are rigged 7 ways to heaven. But, after doing this for, 17 or 18 years, most people that follow the markets know for a fact that, the precious metals markets are being managed. So we're kind of preaching to the choir now, but we just don't quit because we're not going to quit until this is over.
Just how long have you been fighting to try to get gold and silver traded fairly?
Well, Chris and Bill have been at it since 1999. That's when they first started GATA, and I became involved a year later, and I think I was on the board from the year 2003 or 2004, so I've been board member for I don't know how many years, 10, 12, 13. Chris would know, and it's been such a long time. But I can tell you right now, I'll be glad when it's over, and it will end. There's no question about that. It's just a matter of when.
How can people find out more about your newsletter?
Well, they can just, if they're interested in subscribing, they can check out my webpage or just Google my name. That's the easiest thing, Ed Steer, S-T-E-E-R, Ed Steer. And when they do that, my website will pop up, and that's edsteergoldsilver.com. They can do that anytime they wish, and there's a small $100 U.S. per year fee for 200-plus columns a year.
Ed, thank you so much for being on This Week in Money.
You're welcome, and thanks for having me.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of the Gold Antitrust Action Committee. He was speaking to us from Edmonton. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Reaugh, and Ed Steer. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Plus, stand by for company showcase updates from American Manganese President Larry Reaugh and Cypress Development CEO Bill Willoughby. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, President and CEO of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's always good to be back on the show.
And I imagine you still have some great news for us.
Well, I certainly have some great updates. This was a great week for the company, and we've traded a lot of shares. We're at new levels, and it looks like we're building a base here. Even the chartists love us. There's not much more I can say about that, except that, now I think we're into a category, two categories. And again, that's the recycling of lithium-ion batteries and the Cobalt story, because we'll be able to reclaim as much cobalt as the battery contains. And that's going to be significant considering there's about 45,000 tons a year of cobalt used in these electric vehicle batteries. Not that they're all going to hit the market at one time, but they eventually will hit the market. And, by that time, we should have a few hundred of those scattered around the country, recycling plants, because the best way to operate, Jim, build a portable plant that can treat and recycle the lithium-ion batteries so it can go where the batteries accumulate. And why do I say that? Because we have conditions out there where you have to get permitted just to move the battery the way it exists today. When it's spent, there's all kinds of hazardous permits that you have to go through. If you're crossing provincial lines, state lines, country lines, you fall into another category of regulations, and you have to meet all those regulations to get it to the recycling plant. But if you can bring the recycling plant to where most of the batteries are, you can get away from all that. And I think people are beginning to realize this. So that's part of our big plan, is to do that. But I'd like to comment on the article we had from Bloomberg last week, in which they talked about us being a producer of cobalt without mining. And they talked about our recycling. This has moved the optics of recycling and the optics of what we're going to be recycling to a new level, a level that we tried to bring it to through our own efforts for a long time, But now people are recognizing that we could be a very significant player out there when it comes to the cathode materials. And I talk about cobalt, and why shouldn't I? It's $70,000 a ton today. And, that's the main driver to drive huge profits to the company bottom line. The longer cobalt goes up, the more potential profits are out there. So I was talking to one of our advisors, Dan McGroarty, who's done a lot of media work for government and for presidents and different fields of expertise, and he was telling me that that he couldn't believe that we got mentioned by Bloomberg because of our market cap size, and so that tells you that, hey, we've got credibility in some people's eyes. I just thought I'd bring that up because Dan said that it should be a point that's made. Not many companies of our size will ever end up being talked about by Bloomberg, unless we're a scandal, and we don't want to be that. So this weekend is coming up. I know I got one Christmas party to go to, and I think that everybody is starting to shut down. I know that people want to know what's happening with the quote and the plans for moving ahead with the pilot plant. Well, Cometco are working diligently on that, but right now is not just them, but a lot of companies out there are being, have to, for their own PR, have to attend all kinds of Christmas parties and have their own Christmas party and on and on and on. So this is generally the period where things slow down a bit, but I expect that hopefully next week sometime we'll have something out on that. And just to let everybody know that we're not sitting back. What's happened to us this week is I've had calls from all over the world. I've had specifically more emails and calls because everybody communicates through the computer today and through emails or messages, and we've had some very interesting very exciting interest from various companies out there, and whether it's in the European market or whether it's in the U.S. or it's in China, we're getting a lot of attention over there. So, what does that mean? Well, I'm an old hand at talking to people from all over the world, and until something happens, nothing happens. But the reality is, we're getting more and more attention. People are beginning to realize that maybe they should be involved. Maybe they should somehow share in the future of the company. And the way to do that would be to step up to the plate with some heavy money and help us move through the next couple of stages. So I think that's coming closer to reality than anything else. We're getting some interesting propositions on financing. And, just until something happens, I won't say much more about that. But, I'm very encouraged by the week. I think the stock closed nicely. And, we did retreat back about 50%, which is probably very healthy for the market. And so where we go from here, I don't know. I won't predict where the price goes, but certainly we're in a whole new life cycle of the company.
Larry, for new listeners, can you explain what American Manganese does?
American Manganese has taken an existing technology in its portfolio and expanded upon that, and that was the recovery of manganese from very low-grade deposit, which is a fully patented project in the United States, Canada, the United States, China, and South Africa, and we have expanded that technology to include the cathode materials, specifically cobalt, lithium, nickel, manganese, aluminum, to the recycling where we can recover 100% of those. And the thing again that I'm going to always mention in any talk that I give is that ours is a closed loop solution. It's the environmental solution at the end of the life cycle for the batteries that the EV cars are trying to achieve, and of course to pass on to the public that they're socially conscious of the environment. So American Manganese trades on the the Toronto Stock Exchange Venture Exchange under the symbol AMY. It trades in the U.S. under the symbol AMY.V. It trades on the German exchange, Frankfurt, under the symbol of 2AM, and which, by the way, has changed their regulations, and we've updated and paid the fees and everything else to continue to be listed on Frankfurt. And so, because we're starting to expand our market in that area. So and if anybody wants to do some due diligence and investigate the company, we try to keep a website that's friendly and where you can pull up everything that you need at AmericanManganeseInc.com. If you have any questions, you can email me at lreaugh, REAUGH, at AMYMN.com, or you can phone me at 778-574-4444.
Larry, thanks for the update.
You're welcome, Jim.
We've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. We were chatting on December 8th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Bill Willoughby. He's CEO and Director of Cypress Development Corp. Their website, CypressDevelopmentCorp.com. Welcome to the show, Bill.
Thank you, Jim.
What kind of latest news do you have from Cypress for us today?
Well, Jim, we've just put out a press release this morning, which covers drill results from our Clayton Valley project, which is located in Nevada. It's just east of Albemarle's Silver Creek lithium brine operation, and we are working on a claystone deposit, which covers about 4,200 acres. And we've just had results from our first 3 drill holes in our fall program there. So that was what the content of our news release was today.
Bill, can you give us a few more details?
Well, Jim, we've had 3 drill holes that we've completed. And the first one in DCH-10, we had about 64 meters of 1,000 parts per million lithium. And that hole ended in mineralization. And our second hole, DCH-11, we had an intersection of 103 meters of 1,029 ppm lithium. That was drilled just northwest of DCH-10. And our third drill hole, we had another 64 meters of 700 parts per million lithium. So in all, what we're satisfied with on this part of the drill program is that we're proving continuation of the mineralization we saw earlier on Dean, moving northwards into the Dean property.
For our new listeners, can you tell us a little bit about Cypress Development Corp?
Well, Cypress, we're focused on lithium exploration in Nevada. We have 2 properties in Clayton Valley, which are the Dean and Glory properties. And we have completed drilling on our fall program on Dean. Our drill rig has moved south onto Glory, where we are now still actively drilling. So basically the focus of Cypress is to develop a resource on our 2 properties in Clayton Valley.
Where is Cypress traded?
We are on the TSXV, the Toronto Stock Exchange Ventures Exchange, and we're under the symbol CYP. We're also on the OTC bulletin board under CYP.V and also in Frankfurt. That one is C1Z1.
And if people wanted more information about Cypress Development, where can they go?
Well, they can go to our website for starters. That's CypressDevelopmentCorp.com. And also we have all our information up on CDAR, of course.
Bill, your website again?
It's Cypress Development Corp.com. That's Cypress, CYPRESS, Development, DEVELOPMENT Corp, CORP.com.
Bill, thanks for the update.
Thank you, Jim.
My guest has been Bill Willoughby, CEO and Director of Cypress Development Corp. We were speaking on December 5th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.